Thank you for joining us. Welcome you all who are from Corinthos community, or some of you who have been engaging with us lately. And today, our theme in the Angel Talks is the importance of angel investing for you and society. And we could never have a better guest to be speaking about this than Marcia Dawood, our very special guest today. For those who don't know me, I am Cynthia Mano. I am the CEO of Corinthos Network, and today I'm going to be your host. I want to share a few things about Marcia and angel investing and how this all happened. So we have, before I leave the floor to Marcia, make her introduce herself, I will just tell you a story about this. Marcia and I, in fact, I'm reading her book right now, and both of us, we learned about angel investing for the first time. It was 2012, so some time ago. We were in different situations. By that time, I was a founder, coming from a corporate life, so still trying to figure out all this startup world. And someone told me what was an angel investor. And I was it was hard to me to understand that figure, that world by that time. But I couldn't even imagine that some years later, I could be an angel investor myself, and I would be here talking to Marcia about her experience on this. So I'm really happy and thrilled to have you here, Marcia. Welcome to our community, to our Angel Talks. And before you start introducing yourself, I would like to give you some context and ask you to start our first question so we can take the most time of the audience, and then after our conversation, leave some space for questions and answers. So I am sure that each one of us here, we have a different story about this contact with angel investing. So some of us are curious about it. Some of us are already invested in startups, and for each of us, it happened in a different way. So my first question with you, after you introduce yourself, would be how it happened to you, and how and what kind of things would you recommend to people starting in this journey that you could have done differently, or what kind of advice you could give to them? Thank you so much.
Yeah. Hi, everyone. Thank you so much for having me here, Cynthia. I love talking to people all over the world about angel investing. It's so important. So similar to you, in 2012, I was invited to a meeting. I had no idea what angel investing even was. I was just so curious, and I lived in Pittsburgh, Pennsylvania, which is not really the metropolis of startups, or at least it wasn't at the time. It's gotten a lot different. It's very different now. But it wasn't Silicon Valley or any of the big places that you usually hear about in the US that have a lot of startups. So I thought, well, this is interesting. And I was working in a very corporate job at the time, kind of doing all the same corporate things. And I went to the first meeting and I thought, oh my gosh, this is like fascinating, all the things that people are doing. But how can I be a part of that? Because I'm not a finance background. I don't have all of this, knowledge about this space. And in the meeting, they were talking about a lot of terms that had to do with finance and things like that. But I quickly picked it up. And before I knew it, after being in a couple of different groups, because I did move around the US a little bit, I ended up being on the board of the Angel Capital Association, which is our US society for professional investors, or people that really want to join together and either network or get education. And we also do some public policy work too. So I went on to chair the board, and now I'm also an advisor to the Securities and Exchange Commission here in the US for small business capital formation. So on that committee, what we do is we try to advise the SEC on things that might help to expand the amount of capital that are going to small businesses. So that's kind of where I am right now. So what happened is, over the years, between 2012 and now, I would get very curious about all of the different ways that you could invest. And in 2016, equity crowdfunding came out. I thought that was very interesting, because now you did not necessarily have to be what we consider in the US an accredited investor, meaning that you have a certain amount of wealth or income. It could be really open to anybody, and people could invest for as little as $50. So to me, that was like really fascinating, in a way that we could kind of start to democratize this whole asset class and get more money into the hands of founders. And then from there, there's been a lot more that has happened. There are a lot of funds now that are way more accessible. Back in the day, you used to have $250,000 or more, maybe even $1 million if you were going to be in a fund, because that meant that you were going to let somebody else make the investment decisions. But now there are so many ways here, at least with a lot of the angel groups here in the US, that we have funds that are attached to an angel group. And sometimes you can invest for as little as maybe 10,000 US dollars. And it's much more accessible to people. You usually do have to be under the accredited investor status as far as how much wealth and income you have. But it makes it a lot more accessible and gives people instant diversification. What I found, to answer your original question about mistakes that I made, or what could I have done differently, and what do I really recommend for newer angels now, is think about the diversification that you are going to have with the amount of money that you're willing to put into this asset class. So we know it's risky. We know it is a lot of earlier stage companies. So picking one or two companies is a very, very bad idea. Don't do that. Don't pick one or two companies and then just invest the money that you have in those, because you have no idea if one or two or any of these companies will actually do very well. You really need a diversified portfolio. They of the angel investing world say at least 10 companies, but really at the Angel Capital Association, we've talked about having at least 30 companies in your portfolio. But nowadays with funds, you could invest one time into a fund and sometimes even get 10 or 15 companies in your portfolio, very quickly. So I really like that approach. I think that that's a really great way. We also at the Angel Capital Association talk about only using about 5 to 10% of your investable assets toward alternatives, we call them, like anything that would be not liquid. So art, angel investing, any of those things. We usually try to keep it to 5 to 10% of your investable assets. So I wrote this book called Do Good While Doing Well in order to try to encourage people to want to be angel investors, or to really understand why they would help make change in the world and how they can help make change in the world. So it's not necessarily a book about term sheets and due diligence and how to do all that. There's lots of books on that. This is more like, what are all of the ways that I could make an impact and be able to do this? So I do talk about equity crowdfunding. I talk about investing with philanthropic dollars, because that's something that's becoming more popular, where you can invest in a for-profit company. We can get into that a little later. But really, I wrote the book because it was the guide I wish I had when I started. I actually have a worksheet that goes with the book called a halo strategy, and to allow people to think about, okay, well, what is it that I care about? What are the things that I want to back? How much money do I really have to do this? And am I going to use money, or am I going to use my time, my network, my expertise? There's a lot of things that people can do in order to help these early stage companies to grow. So that's really my mission now, is to try to help get more people who are investors on the playing field so that we can help these founders to get funding.
Amazing. Yeah. And it really resonates with what we believe in Core Angels, like the portfolio approach, like always bringing more people to the table to invest in startups, because we truly believe in the impact that angel money brings to the economy. But I want to ask you something, Marcia. I was reading your book, so Do Good While Doing Well is a very good title, because it compares like some myths that we might have in our minds, that is investing money and doing well, comparing to charity or philanthropy or donating money to good causes. So do you think angel investing is like a mix of this concept? How do you see this? Why did you bring this title to the table? If you could share with us, I think it would be very enlightening.
Yeah. So here in the US anyway, about $475 billion is donated every year to charities, which is fantastic. And it's a lot of money. But in the grand scheme of things, that is equivalent to about 1% of the value of the US stock market. So if you're talking about the amount of money going to change, so we're talking about, are we going to put all the burden on charities to cure cancer, cure diseases, fix the environment, all of the things that we want, poverty, hunger, all these things. If we want all of these things to be looked at and dealt with and basically be given a way to change, how is it that we're going to put the burden all on the nonprofits when all they're getting is $475 billion, which is really only about 1% of what at least the public markets here in the US are valued at. So the change, the real things that are big things that are happening in for-profit companies. So how can we kind of merge those ideas? How can we help these nonprofits to be able to work on this, because they just don't have the funding or the pieces that they need? I mean, even look at how much nonprofit leaders get paid versus for-profit leaders. It's crazy. It's insane. So I would love it if people would start to take some of their investable assets. So keep donating to charity, keep doing all those wonderful things. But let's say that you're now very invested in stocks and bonds and whatever else you're invested in. If you could think about taking some of that money and actually coming into this asset class and being able to kind of be in the middle a little bit. I mean, yes, angels, we want a return. We do want financial returns. This is not charity. However, we are doing this for a reason that has to go beyond what it's all just financial. I mean, and I've had people push back on me for that and actually say, well, that people do make a lot of money in venture capital, which is absolutely true. And so there is that opportunity, and everybody should have those opportunities. But I'm also saying that you can do that, and you can help some of these companies that are really trying to solve big problems. I run into entrepreneurs all the time who are working on things like women's health and climate change and things that are not able to be done in the nonprofit space because they really need to either come out of a university, they need to be scalable, commercialized through a for-profit company. So being able to do that, I think there's a nice balance between you can do good beyond donating to charity, and you can do well beyond your traditional investing portfolio.
Absolutely. Yes. And, I was reading in your book also, you shared that in some part that from the people that you have been hosting in your podcast, Marcia also holds a podcast, The Angel Next Door. I had the pleasure of participating in one of the episodes, and you shared in the book that none of the people that you have interviewed for the podcast says that the angel investing thing is only financial. They just don't mention only financial reasons, right? So it's really a different kind of investment class. But there is also another very important thing that I looked here, that is, there is a study from a group of angels, I think it's Arizona, if I'm not mistaken.
That's right.
Showing that they have invested for every 100K dollars invested in the startups that they have invested, they could measure a 2.1 million in economic output. So a 2.1 million of impact in the economy, which really shows how angel investors can make a difference in terms of growth, not only for that particular startup, but impacting the whole economy, right?
That's absolutely right. Yes. And that study, we just love that study so much, because just the ability to take the impact that this one angel group made. And they did the study over a 10-year period. And it was, I think, close to almost $40 million, something between $35 and $40 million that were invested over that 10-year period. And the impact that was made for every $100,000 that was put into that was really a 21x return to their economy. So think about job creation, the amount of money that now was flowing through the different businesses in their local area. And so this was out of Tucson, Arizona. And I just think that's the type of data that we need in order to show
Yeah.
the impact that angels really have, because we are the first money into many of these companies. And we've talked to, so we're the Angel Capital Association in the US, and then there's also a National Venture Capital Association, which you may have heard of, and they're a much bigger organization. They get a lot more money than we do, but they have said to us, and I don't have like statistical proof of this. However, in our conversations, they've basically said that 90% of venture capital deals are first funded by angel investors. So these venture capitalists wouldn't even have companies to invest in if it weren't for the angels. So we're kind of the front lines, the ones who are really trying to make sure that these small businesses get the capital they need.
Amazing. And now, if I may jump to a question that is more into your angel practice, do you have any kind of business or any type of founders that you look for, or how do you guarantee that you are not seeing just what everybody's seeing, or just following everyone? So, is there any tip that you could share with us?
Yeah, I really believe in syndication or deal sharing, I guess we can also call it. Sometimes the word syndication also implies that you're investing in the same vehicle, which that doesn't always happen, right? So,
Mhm.
but deal sharing, we'll just call it that, because that's what we do a lot in angel world, in especially the Angel Capital Association. So the Angel Capital Association is like, it's a nonprofit. We're not an investment vehicle of any kind. However, we do have a lot of members, angel group members and individual members, that then want to share their information. So we have what we call peer groups. So I run the peer group for Growing Women's Capital, we call it. And we're trying to basically showcase women-led companies that are currently raising in the ecosystem. But let's say that there's an angel group in California that is investing in a company that's run by a woman who is also a member of the Angel Capital Association. Well, then that female entrepreneur could come and pitch to our peer group virtually, and then get exposure to all of the Angel Capital Association members who are interested in also investing in women-led companies. And we have that for life sciences. We have one for impact. We have one for different regions. So the Southeast, the Northeast, the Southwest, all those kind of things. So it's a great way to be able to share deals then across different groups and kind of have our own, I don't know if I'd call it super exclusive, but like exclusive way that we can see deals that maybe other people aren't seeing.
Amazing. Yeah. And well, this will lead me to my last question, but I'm sure our audience has other questions to ask. So you were talking about deal sharing and talking about looking at the future of angel investing with all the experience that you have, and also talking to many investors. What do you see as a trend for the future of angel investing? We were talking about collaboration, like deal sharing, sharing practices, like networks, investing together. Do you see this as a trend? And also, like, do you feel like angels are looking more into opportunities of investment that relates to impact, positive change, or how do you feel it?
Yeah. So, okay. So just to back up for a second, the pandemic really changed things, at least in the US. I'm sure it did in other places of the world as well, when it comes to investing and how comfortable people feel investing in an entrepreneur that they've only ever met online on a Zoom meeting, just like this.
Yeah.
So that was a really, really interesting change to watch happen, because before 2020, I would talk to angel investors and they would say, look, if I can't drive to see the company and get back in time and have a meeting with them and get back in time for dinner, then I really don't want to invest in that company. So it was like almost this, it was a regional thing, but it was like a thing in their mindset that, oh, I don't want to invest in something that's going to be too far away. Or if I've never met the entrepreneur in person, then I could never make an investment in them. But then we all went into lockdown. And so now things are very different. And so it's really interesting to watch just how much the angel groups that used to be in one area, like I'll give you an example, Cincinnati, Ohio, which is kind of in the middle of the country. And they used to invest solely in their region and in Ohio. And now they have members in, I think it's something like 35 states, and they're investing in entrepreneurs all over the country. And 90% of their activities are now online. So this is just a very different phenomenon. So, and I think what happened with the pandemic is it sped that up. So I think we would have eventually gotten there, but would we be there this quickly? Because back in 2012, when you and I started, it was very, very regionally focused, and you kind of only invested in the people that you knew and you met and all that kind of stuff. Well, now all this deal sharing and all of these things are just really expanding and stretching out. And cross borders is also, becoming more of a thing. I will say this, there's still a lot of legalese and a lot of paperwork you have to deal with that, but it is becoming more of a thing because you can meet people and get to know them a lot differently now than you could before. So I'm really encouraged from that perspective. And then also I'll mention that because of things like equity crowdfunding or ways that that people could get in kind of in an early low barrier to entry, I think we're going to start to see more younger people. Maybe they're not at a wealth or income level quite yet, but they're very interested in helping with innovation. They're interested in investing for change. They care a lot about the climate. They care a lot about healthcare. Not that we don't, but you know what I mean? Like there's just, they're at that stage where they really care about, they want to learn. And I think there wasn't something like equity crowdfunding back when I was learning. So it was like either you wrote a check for 20 grand or whatever it was, or you didn't play, So now I feel like there's this a little bit of a gateway for younger people to learn. And then as they accumulate more wealth and income, then they're going to start to invest more and more into this asset class. So that's something that I think is really exciting, because if we can get younger people to really want to affect change and start to show them all of the ways that they can do that, I mean, imagine the types of changes and innovation we're going to see in the world.
Exactly. Yeah. And, I've been talking to some people from family offices, like the second generation or the third generation of some family offices, and they are really keen to it. Like, I don't want to be investing only the types of assets that we have been doing forever. I want to take a look at the startup thing, how this can really promote impact, and sometimes very focused in some industries related to the family business or to the specialties that they might have. So I really see this trend, and it's really good if we can bring more entrepreneurs or more younger people to the angel investing scene, because diversity brings a lot to the table, and it's really helpful to our founders, to our invested startups. And this is curious what you're mentioning about the pandemic. We see this very much here in Core Angels, because we were born right during pandemic times, and we started growing after pandemic, especially because of this thing that you just mentioned. So if we're not doing things through Zoom online or signing contracts with DocuSign, nothing's going to happen. So this was the way that we had to adjust in order to continue promoting and funding startups. Very, very interesting insight that you brought.